Bankole, we see yields on the short end of the curve today ticking higher. What's driving those yields?
Basically, it's all about liquidity. Inflows are yet to come in for this month. Market actually expected federal allocations to come in since last week, but there's been a delay. But we know that there's been a meeting and an amount has been agreed to be pumped into the economy. We expect over 300 billion naira to move into the economy. Of course, that will be for Monday. The fixed income dealers sold a little bit of their positions to some to take profit, and then at some point you want to weigh profitability against liquidity. Sell a little bit of your short-term maturities to have some liquidity rather than go take deposits at very high rates. Overnight rates are doing 12%, between 11.75 and 12% at the moment as we speak.
What are bonds at the long end of the yield curve doing?
Okay, the longest bond we have is at about 12%. We have a bond at 10%, that's the 2014, that's 3 years. And then the 2030, just like I said, is about 12%. The difference in yield is not so much, given the difference in tenure to maturity. But a lot of activity has been focused on the 2013 and 2014 maturities because of their very attractive yields. Comparing them to the longest bonds of those 2030 maturity.
When we look at the Naira, it really has been under some pressure. Sitting at a 2-year low earlier in the week of 157.92, it has retraced slightly from that against the dollar. But going forward, do you expect this depreciating trend to continue?
Well, the pressure would be there because the demand is very real. We are going into the last few months of the year. We're going to see a lot of demands for LCs. People want to import some seasonal goods. We expect that, and then of course people who were paying school fees are done theirs. That probably accounts for the pressure you're talking about. But oil companies are selling down some of their dollar stock to meet some obligations in Naira.
So do we expect?
Today we know that Shell
do we expect that to have some?
Try to sell some dollars.
So we see some dollars coming into the market. Should that prop up the currency in the short term?
Yes, the pressure reduced today because I know oil companies try to sell some amount. We don't have the figure, they don't disclose it, but Interbank closed at about 156.35 compared to what it did during the middle of the week. Yesterday, Interbank USD Naira got to 156.70 levels, but the pressure is marginally reduced today. Going forward, the pressure might be there, but we expect the CBN to always come in to intervene if it gets into the 157 levels that you described earlier.
You expect the CBN to come in to manage the currency, and of course, Sanusi really citing the reason behind the 50 basis point increase in the MPR at this week's MPC meeting. When do you expect this to really start trickling into the real economy and starting to help prop up the currency? What
the CBN will usually do is to regulate the amount of dollar they selling to the economy via the WDAS, which is done twice a week. We have seen them sell in the last few weeks $700 million exactly, and then they sell to Bureau de Change directly too. But when the pressure is so much on the Naira, we may see increase on the WDAS. So that's the direct intervention that they do. We expect this to come in if they deem it fit.
How much are we expecting the CBN to come to the market with next week?
Next week, we expect another round of 700 million. It's usually done in tranches of 350 million on Mondays and then Wednesdays. But if over the weekend the demand, drives the gap between the interbank and then the Bureau de Change, that's the dollar rate to the Naira on the streets, so wide, what we'll see is that CBN will increase the amount they will supply next week, and then just to restate the Naira back to what it's at 155, 156 levels.
Can anything else be done to help the Naira at this point? Because of course the CBN has only limited power, and we still have crude oil prices above that $100 mark, but that doesn't really appear to be filtering in to help prop up the currency.
Well, apart from sales by oil companies from their crude exports from their crude export proceeds, we expect foreign investors, FDI inflows, to come in for fixed income securities that are still very, very, very attractive. One other issue is that, looking at the global markets, equity, you see a lot of investors selling down based on the fear for another recession, which is global. If you look around, on the global market, Nigerian bonds and T-bills are still of a very attractive returns and yields. So we expect that when these inflows come in, it will reduce at least marginally the pressure on the naira.